Thank you for attending. This is Seewing Yee from the Yee Real Estate Network. My guest speaker is Mr. Richard Advani, and from Supreme Lending. He's a investment loan advisor who help risk investors to get financing for investment property from 1 to 4 units all over the country in all 50 states, as a matter of fact. So today's topic, we can talk about multiple investors, risk investors, closing escrow 2 or 3, 4 or 5 properties in like a 3 to 6 months timeline. There are 2 scenarios I want to discuss. Now, I'm sure you ran across this as well. When we run across pretty consistently over the years, our California investors who are doing the 1031 tax-free exchange. For example, they have an investor have a $1.5 million rental property in California, who's not getting much cash flow on their rental property in California, and they want to leverage their real estate portfolio. They want to do a 1031 tax-free exchange. They want to sell their $1.5 million property. The loan balance is $500,000, so they potentially have a $1 million equity. So for those of you who does not know what is a 1031 exchange, that means if you sell your investment property and you have a profit, you have to pay hefty capital gains taxes, unless, by the way, we are not tax accountants. We are not giving tax advice. Richard and I just want to make that clear. So in order to not pay capital gains tax, in order to defer your capital gains tax, you should do a 1031 tax-free exchange to buy replacement properties out of state for higher cash flow, higher appreciation, leverage your properties, your portfolio, exchange maybe 1 California property to 10 out of state cash flow properties. And so my question to Richard Advani as a loan agent, I'm sure you've done it before. So once the investor have identified the 10 properties out of state, for example, 3 in Florida, 3 in Texas, 3 in North Carolina, for example, and the timeline, they have to close escrow within 180 days, which is 6 months. So there's a lot of stress going on, a lot of urgency, a lot of deadlines. So and the investor is doing 25% down payment on the replacement property. We're talking potential 10 properties to be purchased on the transaction. So when investors on this situation comes to you, and that they need about 7 or 8 mortgages. Some of those replacement property could be a duplex, so you can still do 1 loan, or even a 4-plex. So, and they have a multiple closing scenario with the other deadlines. So, Richard, how do you advise a investor client that are closing escrow, for example, 2 mortgages, 2 loans simultaneously in 1 market, then 2 weeks later, another closing in another market on a replacement property? So how do you maneuver? How do you how the underwriter, the lending, how the debt to income ratio situation, documenting the lease agreements, make sure as a lending, as a property gets closed, how does the underwriter, from your perspective, able to qualify for the investors to close another property with a loan on such a short period of time? So help me understand. Did I ask you correctly? So
yeah, absolutely. I mean, the first thing I have to say is it's extremely, extremely important to work with a lender that's used to working with investors, right? There's so much relying on a 1031 exchange. And if you don't fulfill the terms of that 1031, you can run into an issue, obviously, where now you're taxed on it. And what that means is, obviously, firstly, dealing with the lender that's licensed in all the markets that you want to buy in. The worst thing in the world is if you have 3 or 4 lenders working on 8 or 10 properties on the same 1031. Everyone needs to share documentation. Everyone needs to stay up to date. And a lot of people, if they're not familiar and used to working with investors, guess what? Their underwriters, their processors, everyone on the back end is not used to working with investors. So they're not going to have quite as much flexibility, and they're not going to be aware of what you really can do to maximize people's finance opportunities. So, I wanted to start once again by saying, if you're doing a 1031, definitely make sure you're vetting the lender. Myself and my team do tons and tons of 1031s every year, or every month even. And that expertise is very important. Now, to get to your question in terms of how we qualify people, so the planning and strategy part of a 1031 prior to you getting into the 1031 is very important, right? The biggest mistake you can make, or one of the biggest ones, is starting a 1031 without having consulted with a good lender, because the advice that I give you on that initial strategy call is going to change the strategy that you take in purchasing these properties. One of the reasons is, although we have the unique ability for Fannie Mae to use projected rental income on the property you're buying, even if it's not rented out, although we have that ability, when you're buying multiple concurrent properties, you can't use rental income to qualify on all of them. And the reason why that's important is, one of the major things we look at to determine debt to income ratio, or excuse me, to determine what you qualify for, is your debt to income ratio. And most lenders, if you buy 5 rentals at once, they're going to hit your monthly payment, your debt to income ratio, with those monthly payments of those rentals without giving you any rental income.
Yep.
Which means no matter how much money you make, even if you have a very low debt to income ratio, even if you're an engineer at Google, there's only so many properties your debt to income ratio can take in terms of a hit. So one thing that we identify up front on that initial consultation call, leading up to even selling the departure home for the 1031, is, hey, what is your debt to income ratio now? How many properties can it support hitting on your debt to income ratio with multiple concurrent closings? And if there is an issue, then that changes the strategy, right? One changes, let's say your DTI can support 4 properties at once, right? But you need to buy 8 for your 1031. So one strategy behind that is closing the 4 earlier. In the 1031, you have 6 months to close all the transactions. So identifying properties that are ready to close today now, right? You buy those 4, there's a chance you may need to rent those 4 out over the coming month or 2 later, before you can close that next round of the 1031. Or if we identify your debt to income ratio can only support 4 properties at once, another strategy is buying properties that are already rented out after the 4, right? If the property's already rented out, we can use 75% of that rental income to offset that monthly payment. And now all of a sudden you do qualify for your 8 properties. So I know some of this may be a little confusing, and it is, because these 1031 consultation calls, oftentimes, they can take an hour and a half, right, to really get down to what you will qualify for. It's my job to make sure that what we discuss is what we're able to deliver on, because it's super crucial that we do, obviously, right? And then if you're going to go over that 10 limit, then, we have these non-conventional loan options that don't have a debt to income ratio. So you don't even need to worry about renting them out, or how many you can close at once, because with that program, the sky's the limit. So the good news is we always have a backup plan as well, right? If something doesn't go out perfectly well, that doesn't mean your 1031 is going to go bust and you're not going to be able to buy that last property. In most situations, we'll be able to push you onto this non-QM program we have that we spoke about in other webinars. So if you want information on it, go scroll through. I'm sure you can find that additional webinar where we talk about that non-QM program. But, moral of the story is, you're not going to be able to watch this segment and understand everything and feel confident about moving into a 1031 where you're deploying $1 million into 10 or 15 rentals, right? You're only going to have that comfort level and that strategy once we have that consultation call. But once again, look, if I'm looking for a CPA that really works with real estate investors, my first question to that person is, you're specialized in investors, right? Yeah, great. How many rentals do you have? And if their answer is none, I'm not working with them, because how good can you be if you're not living that yourself, right? I myself have over 20 rentals across the country. I've been personally a part of tons of 1031 exchanges. So I understand the deep knowledge of how everything works. And I'm able to impart that knowledge, obviously, onto my clients to ensure that we have successful 1031 transactions. So don't work with just anyone. Don't work with your cousin's brother's aunt because she has a real mortgage license. And don't work with the guy that helped you buy your primary home as much as you like him, because he's not going to be the best tool for you to get the job done.
Richard, I mean, as I listen to you, I'm just thinking, wow, I watch other YouTube channels for several years now to talk about real estate, and I work with other real estate investors. I mean, you, Mr. Richard Advani, the topic you just finished discussing are not being talked about. Many real estate investors that already done 1031, that make a lot of mistakes in the past, did not have a team such as you. You, the primary loan agent doing the 1031, and for myself as well. I mean, we are a team, right? The investor, before they do a 1031, they have to look at their why they're doing then 1031. I mean, what are their goals? Does it make sense, right? And that's why they my network, we're part of a team, a community of financial pros, just as you and I, and they need a 1031 tax deferred intermediary company that can help them do the paperwork, right? To comply with the tax rules and regulations. And they need a tax accountant. They need myself as a real estate investor advisor that can help them identify what properties to buy out of state, for example, right? So, I mean, so to recap, you need an investor, a real estate investor doing 1031, or even not doing 1031, or they want to buy a multiple properties out of state, cash flow properties. They need to find the right market. They need to find the right turnkey provider. They need to find a real estate investment club to help them maneuver, because this one financial decision, this 1031 exchange, we talk about a lot of money. If you do it wrong, I mean, it will set you back financially in many respects. So again, the bottom line is surround yourself with a trusted team of financial advisors. Myself as a real estate investment advisor that can have those turnkey properties available because we have a network of realtors in many markets that can help those individuals to find the replacement properties, and having you, not too many loan agents out there do what you do, Richard. You have a niche. You have a very highly specialized niche that very few loan agents in the country have. You understand the big picture. You understand investment property, how to do multiple loans and
I drink the Kool-Aid too, right? I'm here investing in all the same markets you guys are, and it works. I've been doing it for 13 or 14 years now. I have regrets for sure. The only biggest regret is not buying more, right? I would have eaten a cup of noodles for 6 months if I had to buy more,
Yeah. Myself included, right? I've been around for almost 20 years in real estate investing. You too, you as well. We make our mistakes. Nobody's perfect, but we learn from it, and you can never value the expertise and experience of a financial team of professionals helping real estate investors out there, to reach your financial goals. Not only do 1031, but doing just by straight out investment properties. One final thing I want to say, because in the last few years, Richard, the real estate has been going through a record prices. And many of our investors already, and many investors, not only ours, have purchased investment properties all over the country, right? And because of the record housing prices, I bet you 1031 will be one of the primary vehicles for the foreseeable future, because we've been seeing so much equity growth with housing throughout the country. I'm willing to bet you and I going to be involved in more 1031s, because Yeah, because the investors that bought in our market, like those single family home duplex in
Oh, they
Austin,
doubled. Yeah.
yeah, in Florida, North Carolina, their property in past 3 years, their rental properties they purchased from us, some of them already have double in value. You know what's gonna happen? When you know what they should do? I'm not saying all of them, they can do more 1031 exchange from the property that they purchased only a mere few years ago to leverage more, to buy more properties using 1031. So this is like this is amazing, right? So to recap, I know you have only 2 minutes. So what are your big picture recap in terms of this particular topic?
I'd say the biggest thing once again is that, use that trusted team. Look, whether it's me or someone else, make sure they know what they're doing. Make sure they are an investor. Make sure they work with investors. And if they haven't done 50 or 100 1031 exchanges in their career, at least they're not the right person for you. And don't put $1 million or $800,000 of 1031 money in inexperienced hands. The worst thing in the world is I had people who are like, oh, well, someone's $400 cheaper on their lender fee, so I'm going to go with them. And 2 months later, they call me in a panic. And, most of the time we can fix the problems that the other lender created due to their lack of knowledge. But sometimes we can't. And these people lose a lot of money, so work with the right people.
Richard, before we go, I really, you and I have been doing a lot of webinars together. I believe this webinar module is a blueprint. It's very important educational content. So I'm going to broadcast this video to all the investor community all over the country. So because you never hear this kind of strategy being talked about, what we just did in past 15 minutes. So these are value add information, very practical, very real, very just insightful, and I don't know what other words come out of it. So thank you for helping to do this, to talk about this very important topic, which Mr. Richard Advani. Thank you for your time. I'll let you go. This is Seewing Yee from the Yee Real Estate Network. Thank you for attending. Have a nice day. Bye-bye.